Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. My fellow sheeps, we got CPI reporting on Thursday and PPI reporting on Friday. Some big catalysts, big data days coming at the end of the week. All right? And we're going to talk about that in tomorrow's video about how to trade CPI, okay? But today, I want to focus on what we can expect tomorrow. Now, I do want to mention that the day before big catalyst days, that includes CPI, it's usually choppy. So just keep that in mind, all right? So a lot of this price action that we're seeing right now, usually the days leading up to the big catalyst, is usually just noise, and the real move usually comes after the data is released. Okay, watch out for any traps. Okay, we'll talk more about that tomorrow. As far as today goes, we did close lower than yesterday. Okay, bears should be happy. We're looking at this daily candle. It's a green candle, but it did close lower than yesterday. Okay, lower close. So overall, that's still, bearish. We did not clear that 451.7 level that bulls needed to do. As a matter of fact, we dropped as low as 445.2-ish, a little washed below my 445.5 level. Okay, overall, choppy day, as you can tell by this candle here, but it was still tradable. Unlike yesterday, we had one false breakdown setup. Let me see. We had one false breakdown setup right here yesterday. Yeah, right around there. And then after that it was choppy, very untradeable. But today, the moves are a little better. We had a breakdown of my 447 level. Hopefully you guys had that on your chart. I gave that to you guys, so hopefully you had it on your chart. And once we broke it down on the 15-minute chart, I'm looking at a 30, but it broke down on the 15-minute chart. You guys can see right there, it broke down on the 15-minute chart. Boom. And it led to a nice level-to-level move down to 445.5 level. Gave us a little wash below it. All right. So if you played it level-to-level, awesome. All right. And then we bounced. We spent some time there, basing around there, trying to absorb all those buy orders. Unfortunately, the bears failed to break it down. We got a bounce. I did not buy that bounce, but once we recaptured my 447 level, yes, that is a false breakdown setup. I alerted to the group in my Discord, and it led to a decent move. 448.5 was my target. That's where I mentioned to the group to take most profits, and you can leave a runner if you want to. Otherwise, we play it level to level. And if you did leave a runner, it gave us a little more up move, a few more cents, nothing too big. But if you plan to swing it, you swing the runner. That's Uncle Charles' style of trading. Play it level to level with the majority of the move. I usually don't swing, but if I do swing, I would swing the runner. All right. So yeah. So intraday, to me, in my opinion, we got some decent level to level moves. So it was tradable, but overall choppy on the higher time frames. And like I said, with CPI coming later this week, tomorrow could be a bunch of noise, could be more noise. All right. So how can we possibly trade it? Well, as always, watch the levels. All right. We got to close around 448.75. Closed above my 448.5 level, but lost that 450 level. That's actually around where we rejected. The high of today was 450.70. If you look at the dark pool order, we have 3.7 billion in premium at the 450.69 level. I think I mentioned the 450.7 level to you yesterday. We also had 1.3 billion in premium at the 450.71 level. And look at where the SPY rejected. The high of the day was 450.70. Isn't that amazing how that worked with the dark pool levels? Right? So obviously there are some selling orders up there. Based on the price action, how it behaved at that level and where the premiums were, there's some selling there. So definitely watch that 450.7 and that 451.7 to 452 zone. That's where bulls need to clear. We'll round it up to 452, all right? So 450.7 and 452. Watch those levels. You see this yellow line connecting the July high to the July lower high. Breakout of that level is at 454. All right, so above 454, guys, that could be bullish, and we could head to higher highs. That's not what the bears want. That's what the bulls want, not what the bears want. But hey, sheeps, we don't care. We just want volatility. Give us the setups so we can trade it, play level to level, and secure the bags and go home to be with our wife and kids or husband and pets or whatever you guys got at home, okay? Anyways, that was weird. So yeah, that's the bull case scenario. Clear some more resistant levels. 450.7, 452, and 454 are the levels to clear to trigger more upside. Up to there's the gap at 455.5 and 456.5ish, and above that I got a level at 458 and 460ish. All right, that's the bull case scenario. It will start if it can clear 450.7 and 452. All right, now the bear case scenario. The bear case scenario is that it can continue to follow seasonal weakness and continue to give us lower closes and break down some more support levels. 448.5, 447. We almost had it. Broke down intraday, gave us a level move, but we did not get it on the daily chart. If you're a swing trader, you need that breakdown, that close below it on the daily chart. That's not what we got. But if we break down 447, look to short with 445.5 and 444, the June highs, the back test of the June highs, all right, that still could possibly be a possibility. And of course, the gap fill at 442.5-ish. All right, that's the bear case scenario, and it will continue if we can break down some more support levels. Like I said, 448.5 and 447. Play it level to level, and if you're going to catch the home run, let your runners go for the home run. All right? Triple Q got lower, right? We hit that 78.6 fib level around 369-ish, but it bounced, guys. It bounced. Still managed to close below this triangle pattern, of course, or wedge, whatever you want to call it, okay? So not quite bullish. So yeah, watch the support level 371.6, 5, excuse me, 369.5. Gap fill is still at 368. Watch that. It almost filled the gap, but didn't quite get there. Okay, still nothing bullish. It did not, clear any critical resistance level. I mentioned 372.8, 374, of course, but that critical one was at 375.6. So still not bullish to me, guys. We can get some bounces. The market can't just go down straight in a straight line. We can get some bounces, but unless it clears critical resistance level, 375.6, I can't take none of these bounces seriously. All right, so watch for the breakdowns of that 78.6 fib level. We need to close below it on the daily chart, 369.5. That'll be very critical and will be the trigger to go short or go more short with 367, 365, and 363.4 in play. Like I said, we need a clear resistance level, 374, 375.6. Above that, I would be bullish with 375, 379, 380.5, guys. And the test of this trend line from July high to July lower high is around 382-ish. So above 382-ish, that's when I would be bullish for the triple Q. All right? Well, recapturing 375.6 would help the bulls as well. But as of right now, still looking overall bearish. Remember, we're just looking to react. Dow Jones closed lower than yesterday's candle, not showing follow through. Got very close to testing my orange trend line, which is also around my 349-ish level. Barely closed above the 353 level today. Barely, like 2 cents. Holy moly. So if it can show some bullish follow through, we need to get above 354.5 and 355.77. Otherwise, it was a close lower. Bears need to show follow through and give us some daily chart closes below support, 351 and 349. Below 349, I would be bear bias with 346.5 and lower in play. Please add these levels to your charts. IWM, you know, we did still close lower, got pretty close to my 189 level, went as low as 190.4-ish, okay? So it's not bullish, but you know, that end of day bounce don't really help the Bears case in my opinion. So yeah, 192.75, we bounced off that as support, barely closed above that today. Now if bulls want to show follow through from this bounce that they had today, this low is going to need to clear 193.8, 195, and 196.5. Otherwise, could be a dead cat bounce. Watch us the breakdown of support. 192.7, 191.4, 189, and 187. Tesla inside daily candle, okay? We're going to go based on this setup. So the mother candle is 253.65. That's the high with the low at 242.76. Please add those levels to your charts. That is Tesla's chop range. If you want a direction or want to know when we'll get a directional move, the break of that range should tell us. Okay, as of right now, I have 249 as a support level, 251 as a resistant level, and then of course 253.65, and then 255, 259 and high. But overall, based on this setup, bulls need about 253.65 to go long. Bears, well, the support at 247.5, 245, but bears need the breakdown of the mother candle, which is at 242.76. Break that down, that's bearish. We could get a directional move to the downside with 240.7 or lower in play. There's a big gap at 234.76. It's no saying. Gaps get filled, and we're getting pretty close to it. Apple, still overall bearish, but take a look, okay? The Bollinger Bands with the 20 daily moving average been trading outside of it, okay? It's not a buying opportunity, but it does tell us that we need to be careful with the shorts because it could just start consolidating, chopping sideways. It could give us a dead cat bounce, which could hurt the bears a little bit in the short term because some people don't have diamond hands. So just be careful with that. That is an inside candle as well. The low of the mother candle is at 175.35. If that breakdown, that's bearish. The high is at 183. If that clears, that's bullish to put 185, 188.5 gap fill at 191-ish in play, okay? So just watch the break of that range. Anything between that is chop, all right? Some people don't like trading chop, but keep in mind we have CPI on Thursday and tomorrow's Wednesday, the day before. It could end up chopping, so watch the break of that range. NVDA, we had some decent level-to-level style move. The plan was to be bullish above 449, bears below 449. It worked out. We just reacted, and price action said to be bearish, and that's exactly what we did. As of right now, if bulls want to put some momentum in their favor, 449 must recapture, then 452, 454.5-ish, 457.5, or and higher, you know, to put higher targets in play. This trend line is still around 459.5-ish. A recap, you know, you got to get above that to recapture. That would be bullish, and we could go see more upside. All right. As of right now, you know, it look like it's, you know, based on the context of this trend, it look like it's just trying to build strength to head down lower. So, but as long as below 449, stay bearish. Watch for more breakdowns of support. 444, 442, 440. Definitely below 440, we get a waterfall down. All right, 438, 434, 431.5, and 430 would be targets below. Microsoft testing a fib level here around 325. That's my 1.382 fib level. You know, it's trying to absorb in the buy order, but unless we get the close below it, it's not official. Okay, so we need that breakdown of 325. Microsoft is heavy weighted in the indices, so if it can get bearish, it'll likely take down, especially the QQQ with it. All right, so below 325 puts, you know, 322.5, 320, and 316.5-ish in play. Okay, I'll only trust the bounce if it clears resistance, starting with 327.5, 329, 331, and possibly up to 334.5. Above 334.5, I would be bull bias. Amazon just chopping around, consolidating, building an island. Bears are going to need a gap down. so we can get an island reversal or something. But otherwise, if it can stay above 140, which it did not today, but it need to get above 140 and clear 142, that will be bullish to put 144, 146.5-ish and higher in play. As of right now, we need to see some breakdowns of support. Got a new support level at 138.5. If that fails, 136.6 and 134.3 in play. Google. We're doing Goog without the L, okay? Inside candle as well. Mother candles at 132. The high, break 132. We go see higher targets, 132.8, 134. 134, and then possibly up to 135 to 136.4 as well. As those are targets that I have. Okay, breakdown of the mother candles, 129.4-ish. Below that, bearish, look to short with 128, 126.6, and possibly down to 124.3-ish. Meta, look at these candles side by side. It's consolidating for what we will see. The range above 318 looks along with 321 and higher in play. Still need the breakdown of 309. 309 breaks down, look to short. We could get a gap fill around 301. These are some nice, beautiful move. Watch the break of that range, 318 to 312. Netflix just chopped around today. Still managed to close above 437.5. It needs to break down, give us that close below on the daily chart to put 435.5-ish. 432 and 426.5 back in play. All right, if it could still stay above 437.5, then it needs to show follow through by clearing 440, 443 to put 446, 448, and possibly up to 453 in play. All right, AMD showed some follow through from the rejection of the yellow trend line. You guys can see here. All right, it needs to get below 113 tomorrow to show more follow through. Break down 111 and 109.5. That would be very bearish to put 107 in play. We had a double bottom around 107. So if 107 is lost, holy moly, get ready for a waterfall. VIX. Not much to say about the VIX. Just looking at it just hurts my eyes. So I'm going to move on. Sorry, guys. Yeah, we already talked about the dark pool. 450.7. Watch that level. Above it, bullish. Below it, still bearish. SPY option flow filter for 500K premiums or above. What are the big monies doing? They're bearish for the SPY, bearish for QQQ, nothing for the Dow Jones, bearish for IWM, Tesla, bearish for Tesla, bearish for Apple, bearish for NVDA. Bullish for Microsoft. What the hell? Bullish for Amazon. Okay, I can see. Google. With the L. Nothing. What? No one cares about Google. Meta. Bearish for Meta. Nothing for Netflix. Bullish for AMD. Okay. And the VIX. All right, bullish for the VIX. Interesting flows coming in. All right, so thank you guys so much for watching. Let's trade this and play it sheep style, unbiasedly. Bye.